Good evening, traders. This is Coach Alex. We come across a lot of instances where traders believe, especially new traders, believe that it takes some kind of insight or intuition, and the best traders are those who can look at the market and guess where it's going to be a week, a month, Christmas, or an hour from now. And that's just the opposite of what makes a successful trader. If you interviewed 10 of the world class traders, they would almost laugh at that and tell you that a good trader follows the market. Now, you may have an idea of where you think it should go. That's the concept of a trend. If a trend is making higher highs, higher lows, or lower lows, and lower highs, then it'll continue to do that. Trends stay in motion. But still, you can't take it as an intuition. I'll just explain one reason. Once you label a movement or trade that's a product of your intuition or your ability or your analytical skills, well, you're forced to stay with it. If you think the market's going to go up and it's a good time to buy it, well, if it goes down, it's even a better buy because you've predicted that it's going to go up. You put a lot of pressure on yourself, and you get into those situations where you'll say things like, well, it's not a loss unless you take the loss. And you start defending irrational positions. On the other hand, the trader that says, I'm going long because the market's going up right now. And if the market goes down 10 minutes from now and you lose money or even reverse to short, you can blame the market. Say, I was following it. I followed it up, but it didn't want to go higher, and then it went down. I'm following it down. This market's crazy. That's a much healthier scenario than to predict what the market's telling you. And newer traders seem to do it almost as if they're fighting the experienced traders or institutions. So we get a lot of, it looks like the big boys are pushing the market higher or not. Just this morning, and I want to point this out. Okay, this is Eastern time, just about 9:14 a.m. Eastern time. And as you could see, the Dow futures, we were trading roughly around 39,434. So it was coming down to like 24 to 44. It's in a 20-point range. And one of the clients, I sort of X'd out his name. Now remember, we're in the central time zone. So this is 9:13. I'm staying long. Looks like they want it higher so they can knock it down later. Now, yeah, that's a lot of times an institution will move a market in direction for its clients. But it's the I'm staying long, not I'm going to follow the market. And yeah, we get a little tough on our clients, especially those who are learning. Uh, I'd rather have you be upset at me or one of the coaches than get upset at yourself after you blow your account out. So look where he said this. Again, 9:13 a.m., 15 minutes or so before the market opens, right at 9:30, 17 minutes exactly before. It's going to stay long, so it's going to go higher. And the higher, according to him, was the pivot, which is 616. So you're going to stay with for a 200-point gain. Now, there was no healthy analysis. Healthy analysis is the market looks like it's going higher, right? You could say from here to there, right? Because from 858 to 914, it started going higher. Stochastics were moving up. So you could have said, it looks like it's going higher. I will take a long, but if the market turns down, I will get out. I am going to risk $100, $200. I'm putting my stop there. Not I'm going to stay long. I'm going to stay long. You sort of challenge yourself. No one wants to be a quitter. And not only that, we were calling a short. Here's the other thing, finally, about the institutions. All right. How do you know what the institutions are going to do? Well, by charts. Well, there's a lot of institutions. Here's the real fact. We do have access to a couple of them. I used to work with a number of them, like a Merrill Lynch. I talk to clients. I talk now to people who work with the company. We have an idea of what the big boys are doing because we talk to them. So unless the institution calls you on the phone and says we're pushing it higher to get our clients short, and that's what they do. That's what this trader meant, which we do take advantage of. But in this case, they had pushed it up a little bit to get them short because they were going to push it down to get them long. And if you look at it, we were shorting on the open. So think about this. That trader missed. At least he didn't lose money because we got him out. But from 430 all the way down to 307, you're talking about a 140 point decline, which is about our volatility. Then, after the first 3 minutes, you see this, 9:30, the decline stopped in its tracks, pushed around, could not make lower prices, and then after 11 o'clock, started a very powerful rally all the way into the 3 o'clock time frame. So don't rely on your instincts, your intuition. Just follow the market. We have technical tools that will allow you to do that. You can click, sign up with us, take a course, and make money following the market rather than predicting it. Thank you, and we'll see you in the room tomorrow.